Great. Thank you so much to the Unitize team for hosting myself and Ken. Super excited to be here to cover personal finance in the now modern world of 2020. So maybe starting off with introductions just from myself and then Ken following, and we can kick it off. So really quickly, my background, I started off my career as a banking capital markets consultant and then joined a startup out here in San Francisco that was focused on TMT investments called Tegas, was able to scale that both in San Francisco and Chicago, and had always been really interested in crypto and blockchain, specifically for the kind of cross-border ability to transfer money around the world, and at the time had the opportunity to join Pantera Capital. So that's where I'm previously from. Today I'm at FalconX and the team whom I love. FalconX, we're a digital asset platform trading most of the top cryptocurrencies right now, servicing institutional investors. So with that, Ken, I'll let you introduce yourself as well.
Hi, everyone. Truly a pleasure to be here today. My name is Ken Nguyen, and co-founder and CEO of Republic, Republic.co. We're one of the largest private investment platform where anyone can invest in companies and crypto projects that we curate. I started out as a securities attorney and went back into academia for a couple of years before joining AngelList back in 2013, 2014 as its first general counsel. And I think I bought my first Bitcoin right before the interview with Naval, knowing that he would ask about it. And that was, I don't
Good call.
But that effort, got very involved with the regulatory implication of doing new things in fintech. Out of that, we launched Republic when the law changed that allows people, anyone, not just millionaires, to invest in private securities. And I also helped co-founded CoinList as well in 2017. But fast forward where we are today, we do all things private investing. A lot of it are tech companies and crypto projects, but we even have real estate and game development financing. And I'm a firm believer in a more democratized world when it comes to the private market.
Perfect. Yeah. So super excited to kind of double click on this, both on the tech side and, more to your background, Ken, on kind of the legal side as well. That's led to some of these really awesome opportunities for folks to invest in alternative assets and investments. So one of the things in terms of today that keeps coming up, and you'll probably chuckle when you hear this question, why isn't there more adoption? What's holding people back, and is something holding people back, both kind of on the retail side and on the institutional side? What do you think?
Going back a little bit to 2017, 2018, I think crypto enthusiasts at the time probably you see much more adoption in the space by now, by the end of 2020, wouldn't you say?
Yeah.
But fast forward a few years and through the crypto winter, you still see more or less the same, crypto enthusiasts and everyone else knows about blockchain and definitely has heard of Bitcoin, but very few people actually taken that step to buy, to invest, to be a part of it. And I do think adoption is the promise, the potential of the entire industry, how to make it more accessible, more secure, easier to hold these crypto assets. And we're doing our part at that, but I wonder what you're seeing as well.
Yeah. So I completely agree with you. Actually, some of the trends we've at least seen this year is similar to what I think a lot of folks have seen with the Robinhood effect, or the perhaps Coinbase effect, I call it, on the crypto side. And a lot of that, when the government gave out stipends following the now official recession, a lot of that money, which is really exciting for the space, was sent and put into crypto. And I think Coinbase was able to report on some of those numbers, which is pretty exciting. Similarly, on the retail side, we are seeing that happen with Robinhood. And I think one statistic which is just crazy to me is Robinhood actually has, I think, somewhere around 10 million accounts, as opposed to like 3 million that Morgan Stanley has. But the average size of the account, Morgan Stanley is around 900K, whereas Robinhood is anywhere between $1,000 to $5,000. And so the difference in accessibility there is huge. It's pretty simple and standard and straightforward to open a Robinhood account. It's very difficult to open a Morgan Stanley account. It takes way more clicks. You can lose the person somewhere along the lines. And so I think that's different there. The other thing that we're seeing more on the institutional side is similar again to what we're seeing on the Robinhood side, is that because more and more retail are coming in, the flows are a little different, right? And so we were seeing a lot of, at times, sell pressure from Asia coming in, but the price was still coming up for a lot of, whether it's Bitcoin or altcoins, mostly because of this buying pressure from the retail side in crypto. And I think that's great to see for the industry. But to your point, it's more than just buying and holding. I think being able to understand specifically what's going on with these assets, where to comfortably store it in a secure place. These are all questions people are asking, and I don't know if there's a clear path or solution there.
And one of the subsets of the industry, commonly known as digital securities, or STO, been very underwhelming, or performing below expectation the past couple of years. And I think that's exactly is the problem, the lack of adoption. But on the other hand, I do think that the next wave of or the next 12 months and beyond, people will naturally want to see real value underlying these assets in order for them to get in, meaning the retired dentist or lawyer in Milwaukee or in London, may not just believe in supply and demand and community engagement. He or she would want to see that economic value underlying it. And that's why I think outside the Republic, very optimistic about the future of STO.
Yeah, no, I couldn't agree with you more. I think, one of the things, and to your point, I kind of boil it down to a few things. The first is what you mentioned, right? Accessibility. How easy is it for people to buy digital assets? Is it, now with the potential news of Venmo and PayPal, hopefully that's really exciting and can open the market to additional retail folks. But right now, I think the biggest players are Robinhood, Coinbase, you have Cash App, all of these who, some of which have also auto deposits, which again makes it much easier. But then the other question is just education. I think, one statistic that is very near and dear to my heart is that women and minorities are actually 7 times less willing to take on risk than men in the markets. And so a lot of that comes with just education in addition to accessibility. And so what would you say? I know Republic takes a lot of pride in both making things accessible and educating folks on the different products that they have on their platform. What would you say to that?
Yes, when you look at the venture space and blockchain as tech as an extension of that, there's no question that the number of underserved founders, female founders, Black and brown, and those in cities and regions that have not traditionally gotten the attention pretty much anywhere that's not New York and Silicon Valley, the two coasts, right? We have always, we launched Republic with the mission of leveling that playing field. And today, 50% of the capital on Republic, on the retail side of Republic, have gone to underserved founders. And we do believe that particularly blockchain technology really does enable a far more diverse subset of investors to participate. So here's an example. On day one, when we launched in 2016, the minimum investment amount in Republic was $50. Well, that's a reasonable amount and a low enough for people in the US, but you couldn't expect someone, a stay-at-home mom in Vietnam or Ecuador, to invest $50. Why? Because the transfer fee, the international wire fee, would already be more than that amount. So
Right.
clearly made it wholly inaccessible. Now then we implemented Bitcoin investing. You can invest using BTC or ETH, and that brought the transaction fee to a very low affordable
Mm-hmm.
percent,
Mm-hmm.
10, 20 basis points. Then we all of a sudden open up our investor base to people who before were locked out of this, wealth generation event. And, the furthest iteration of that is that the Facebook, the Google, Amazon of the world brought tremendous wealth to the economy, but it basically benefited the ultra
Mm-hmm.
wealthy, investment banks and funds. And I think the next wave of technology, of crypto investing, of blockchain, gotta be much more diverse and accessible. And it's a legal hack in order to get that done. And we now over 500,000 investor community at Republic, but we aim to be many, many more times that size.
Yeah, congratulations. That's a huge feat, especially in this space. And you know, couldn't agree with you more. I think we're seeing it on the institutional side as well. So, I would say a year ago, if you were an institution, you wanted to find liquidity, you probably had at least 7 tabs open on your screen with different service providers, all of whom had their own KYC AML onboarding process, which probably took 2 or so weeks. I mean, it was really painful to be an institution trying to trade in this space. And these are sophisticated folks coming from traditional finance who have had years of experience doing this, maybe on one platform with one broker. And so, that gave us at FalconX a really huge opportunity to fill in that gap, to create much deeper liquidity across different platforms to provide. And I think same to your point on the retail side, it's the accessibility. We keep coming back to this accessibility point. It still hasn't been solved. And one thing I think is interesting, even to your point, if you look in Robinhood and you're trying to buy a stock like Amazon, it's Amazon's really expensive. Not everyone has $1,200 to $1,300 to buy just one share, right? So you have maybe fractional shares, but not everyone gets access to that. So it always comes back to this level of accessibility, which I think on the retail front, Republic is doing a really good job of making that happen.
Thank you. And I agree completely. It's all about UX. The friendlier it is for end users, the more you're going to drive adoption. And I think, as we discussed at the beginning of the chat, I do think that's the potential of our industry. What's your take on Venmo and PayPal now enabling people to pay?
Yeah. Time for the controversial questions. No, no, I think it's going to be great. I mean, the exposure to the marketplace is huge. It's undeniable. I think, it goes back to your point of UX. If the UX is really straightforward, and I personally think this is something that Robinhood has really struggled with. To me, when you're dealing with finance with a retail customer base, you have to go above and beyond to educate folks, and with the understanding that they probably don't know what the financial instruments they're using actually do and the risks associated with that. And so I think, unfortunately, Robinhood has kind of fallen short on that, especially with recent news. I would hope that with Venmo and PayPal, it depends on the use case. If it's just to move crypto around, that could be interesting. If it's like the Robinhood version, where on Robinhood, you're not actually purchasing crypto, you're purchasing the value of Bitcoin at that specific time. Alternatively, you have Cash App, where you're actually holding the Bitcoin in a hot wallet that you can then move the actual currency around. Cash App is very Bitcoin maximalist, so I'd be really excited once they start to offer alternative coins as well. But it'll be interesting to see what side PayPal and Venmo take. Are they going to take the position of just sending money around? Are they going to take the position of actually creating an investment vehicle where you can buy, hold, store it? All of which, again, are difficult questions to answer.
I imagine that it will be some time before they enter the investment world,
Yeah.
or offer for investment products only because that invites a whole new bucket of compliance and regulatory
Mm-hmm.
complexity
Mm-hmm.
that I gathered that it's so outside of their business model as a money transmitter, a payment facilitator.
Right.
Be interesting to see, but yes, the level of regulation and sophistication required to operate in the industry that we are in some way, there's a huge barrier to market in and by itself.
Yeah, no, absolutely. I think it's the one thing everyone on this conference will definitely agree to. The U.S., regulatory um, environment makes it very difficult, I think, to be creative in this space, and so hopefully, I think things will change in the long run. I'm curious to get your take on some alternative investments as well, things that are popping up in the space, whether it's like staking, DeFi. What are your thoughts on some of these new
Yeah,
investment
the
opportunities?
Republic itself, not to be promotional about, but we're rolling out what is, completely new in the industry is a profit sharing token, but it's widely available to non-accredited investors, which people didn't even know that is legally possible, but it is.
Uh-huh.
And uh, I think the notion of investing into enterprises and businesses that pay out a profit, future revenue is, I think, is probably again, I think will define a whole new investment asset class
Mm-hmm.
for us. And blockchain technology, in so many ways, weaves itself into every single asset class. Fractionalization, automation necessarily
Mm-hmm.
means we're going to participate. And
Right.
out of that, I mean, a function of how the stock market, the public stock market, has managed to be, more robust than what people
Yeah.
expected a few months ago. I think it has a lot to do with the number of traders that, like you said,
Mm-hmm.
now enter on Robinhood or otherwise and trade at a lower, dollar volume. But in aggregation, it's a lot more capital getting, funnel into the system. But man, the next 12 months, I think would be so fascinating to see. I'm highly, highly bullish, but now much remains to be seen, right?
Yeah, yeah, I couldn't agree with you. And you actually mentioned a point that I think is super important to know is yields, generating a yield down the line. I think, going back to the point we discussed about education, not everyone clearly understands how important it is to make your money work for you while it's just sitting in an account and what generating yield might be. So it's funny, I have a lot of friends now in just the traditional space who have no idea that they could put their assets into a yield generating savings account versus just a savings account where they generate zero yield. And I think the crypto community is just so obsessed with yield generation, which is great. So, you have staking on one side. I think one thing we've heard a lot of, at least recently on our side, is yield farming, um, which I'd be curious to hear your take on it, especially with Compound recently, exploding with popularity.
Yeah, I mean, it remains to be seen whether or not it's truly scalable at that rate, but they're looking at yield that you get for more traditional asset, forget about just like cash deposit, even more, credible, established yield fixed income instrument to get something like 8%, 9%, 10%, and
Mm-hmm.
higher
Mm-hmm.
is like a remarkable yield. And I think much
Right,
of the investing public still don't even know about that. Like if you ask my
right, right,
parents,
right,
or they didn't know that the concept of which never even occurred to them. So I think there's a lot of potential there, but we haven't tested out the limitation of it. Like, is this
right,
something that can sustain $10 billion in investment volume, or
right.
1 trillion? What's your
Right.
take on the future of this?
Yeah, good question. So it's funny. I remember when I first heard the term yield farming, the first image that came to my mind is not at all what yield farming actually looks like. So essentially, it's really just you collateralizing something either with a stable coin or sometimes a really volatile coin, and then you lending out that amount, and then receiving in comp tokens, which you can sell and then just continue to go through that circle. So that circle of just collateralizing, borrowing, collateralizing, of supplying and borrowing is yield farming, which is not at all what I thought it would be when I initially heard the term. I couldn't agree with you more. Essentially, if there are negative borrow rates for positive lending rates, that doesn't necessarily align. And it means that there has to be some incentive within the system right now to create the marketplace, which is very, very normal. However, those incentives, like you mentioned, with something like $10 billion pumped into the system, it's unsustainable. And so it's a good place to find maybe perhaps riskier yield, but at the same time, you can, in 2 minutes, put your money on BlockFi and get 8% on the year. And so I think the biggest thing is, one, make your money work for you, and two, always analyze the counterparty risk of where you're storing your capital. So like, even if your capital is on BlockFi, and you could probably speak to this really well, right? Even if your capital is on BlockFi or it's with Compound, if it's on an exchange, us working with institutional investors, we really double down into this. What are the capital risks of leaving money with a custodian somewhere else? It's because it's all great when it's 8% yield until it disappears. And so something you need to constantly keep in mind in this space. But curious to hear your take as well.
What you said just led me to an observation about arbitrage opportunities. In the past, past meaning 5 years ago or 10 years ago, a lot of these investment classes, the most attractive ones, there was a barrier in terms of just straight up minimum investment amount. You could not possibly participate in a fixed income product if you couldn't write 20,000, if not a $200,000 check, right? Only for millionaires. And now technology, with changes in the law, pretty much anyone can, like you said, in 5 minutes invest $200 and still get 8% fixed income, or anyone with $10 can invest in a private stock on Republic, or do an index fund like the Republic token. But the arbitrage here is information, is the lack of information. 99.9% of the investing public in the United States and outside do not know that they can, generate 8% return that easily. So the next phase of it is very much about education and how to get information out in a targeted fashion at a time when there's an influx and overwhelming amount of data that makes it almost like, no data at all, because no one can parse through the information, right? So it may very well be that arbitrage in information and how to bridge that gap, or how to level the playing field by better education and content, seems to be the name of the game for private investing in the next phase.
Yeah, I couldn't agree with you more. If I had 2 messages for people coming off of this, and I would love to hear yours listening to this, it's make your money work for you, and figure out a way to generate yield, and educate yourself, to your point, on counterparty risks, on options that are out there. Just there are resources available on the web, and I think us as a community, we need to do better at making them more accessible.
Agreed. Did you say that I share a message?
Yeah. What are your 2?
Well, given the topic of this session, I don't know if people realize that, but 75% of Fortune 500 companies in the year 2020, 2030, 10 years from now, have yet to exist today. So the companies, the technologies that literally will be defining how we will be living and working in the future today in someone's garage, and that's the opportunity to be a part of that, I think, gotta start now. So people should look well beyond just the public market. But like you said, it's highly risky. Invest in a way that is responsible, in a way that you can tolerate the risk and assume the risk involved. But to the extent that you have investable asset, I do think that the private market and blockchain or blockchain leveraged private investment opportunities ought to be part of someone's, everyone's portfolio.
Yeah, yeah, definitely that 1%. Just make it 1% of your portfolio, and we'll all be super happy with that. Thank you, Ken, so much for taking the time, and thank you, Unitize, for hosting us today. Really, really excited to be here.
Thank you
Thank
so
you.
much for having me. Thank you, everyone, for tuning in on Unitize. Incredible to have this conversation today and to be a part of the conference.